Howdy folks, and welcome to the Daily Coin, and my name is Rory, and today is Wednesday, September the 9th, 2015, and I have the distinct pleasure of welcoming to the show the president of Money Metals Exchange, Mr. Stefan Gleason. How you doing today, Stefan?
Oh, really, really well. Thanks for having me on, Rory.
Well, I have to tell you, I have about a million questions, so I'm going to do my level best to keep this to about 20 to 25 minutes. And I wanted to take a short step back, and you guys had released back at the beginning of August some numbers that really grabbed my attention, and I spoke about them in a couple of different interviews, and that was your total sales and the silver, the volume of silver that you had sold, the gold that you had sold, first time orders and repeat orders. And the first time orders is the one that really got my attention, and that was you guys had experienced between June 16th and July the 31st, which is when the U.S. Mint cut off sales of the Silver Eagles. And during that time, you guys, your first time orders exploded by 365%, which is an amazing increase. And are you guys still experiencing this same type of first time order volume?
It's not quite at the same rate as it was during that 45-day period, but there's no doubt that in the last 2 months we've seen a continually high level of new customers. People are really clamoring, particularly for silver, as they become anxious about the turmoil in the markets. It started with the Greek collapse, or the Greek default, I should say, and then the China stock market and U.S. stock market. There's a lot of concern about what's happening in September and October with the Fed and with a lot of other events sort of coming to convergence. And so there's been a huge amount of new interest, and that's, I think, been consistent across the board for all dealers. But I think particularly our company is sort of catering to first timers, and that's why we've seen that kind of growth. It's very exciting.
I would imagine.
Absolutely. I mean, most people in America just haven't, at this point, still have not owned any gold or silver. So, the part of the market that really excites us is the first timers and getting them sort of into the saddle with the right kind of stuff. And, we're seeing some really interesting things happening in the silver market right now in particular. It hasn't really flowed over to gold yet. It could soon, or at least there's some small indications of that. But silver is getting very interesting. It's actually getting a little weird in terms of the supply situation, and we can get into that a little bit more and where that's rooted. But we're definitely seeing some high levels of demand. It's not quite the same incredible demand we saw in July. August was just a little bit slower, but it was and here in September as well. But it's been at a much higher level in general than the first 5 or 6 months of the year.
Well, that's great news for everybody. I mean, not just in particular for your company and for the silver market in particular, but the people that are already all of the people such as myself who already have silver. I mean, because if there's more people that are coming in, that means that there's going to be less supply, which is going to eventually drive the price higher. I don't know what it's going to take to break the chains that the COMEX has. You had mentioned the silver supply getting weird, and if you would, Stefan, just if you would expand on that, I would greatly appreciate it.
Sure. Well, I mean, first of all, you mentioned the U.S. Mint, and they have just been unable to keep up with the demand. And the Royal Canadian Mint and private mints are all having terrible difficulties keeping up with the demand. Now, I would say that at this point, it's almost entirely a matter of bottlenecks, all the way down to the 100-ounce bar level, and everything smaller is in a significant bottleneck situation. There's been a doubling or even tripling of retail silver demand in the last 2 months, and that's completely cleaned out the system for everything other than a few items that are readily available in the market. Everything else is on some sort of slow or some sort of back order or small delivery delays. But the U.S. Mint has a mandate to supply sufficient production to meet public demand. And I think they've just completely fallen down on the job here. They just don't, the U.S. Mint is kind of a pet program. It was formed in the mid 80s for the Silver Eagles. They don't really keep much in the way of inventory of silver blanks to accommodate these surges in demand that we've seen. And they have a mandate under law to supply the market sufficiently, and they've failed that mandate, and they're rationing out Silver Eagles. Their sales are higher than last year. Last year was a record number of sales for Silver Eagles, but they would be selling way more of them, and the public would be able to buy way more of them if they were doing what they're required to do under the law, and that is to supply the market sufficiently. When the problem that they're having really, and the Royal Canadian Mint is having the same problem, is obtaining enough silver blanks to stamp out their government minted coins. Now, they may have had a small surplus of those going into this huge surge in demand in June, but it wasn't enough. It was really not acceptable, in my opinion, that they didn't have enough. They've experienced these surges in demand in the past. They had it in the 80s, in 2008, 2009. There was a huge surge in demand. There were shortages for months. Silver Eagles were on backlog, and they were caught flat-footed. I mean, the U.S. government is not undercapitalized. They just don't make it a priority to have any extra silver laying around. And so they're going out with all kinds of restrictions on the few mints that are even able to sell to them. And then when they need more blanks, guess what? All of the other private mints are deluged in demand for silver rounds, and other government mints are asking them to produce more, and they're not able to get the mints, the blanks that they need. And as a result, consumers have to wait. And so, we've seen the U.S. Mint rationing Silver Eagles. We've seen the Royal Canadian Mint rationing its Maple Leaf coin. And then, meanwhile, private mints who are producing silver rounds and silver bars are also having difficulty keeping up with demand. So basically, the retail market is kind of on the verge of being cleaned out in terms of readily available supply. It's not there yet. Another huge surge like we had in late July, actually early July, would really, I think, kind of put it over the edge. But we're not there yet. It's getting a little bit better. But at some point there's a collision between the retail demand and the paper market lack of demand, and that's really where the 1,000-ounce bars, the very deep sort of core of the market is the exchanges that are built upon these 1,000-ounce bars that are supposed to back all delivery demands. And right now there's much more paper silver being sold, and there's maybe a doubling or tripling of physical silver being bought, but there's a huge supply of paper silver to sell, and that's been driving down the price. And so what we're starting to see is a drawdown of these 1,000-ounce bar inventories at the exchanges around the world, whether it be the COMEX warehouses or the Shanghai exchange and others. And so I think that's really where it comes where the rub is. If we start seeing shortages at that level, or premiums rising on 1,000-ounce bars, then something is very serious, is happening in the silver market, and there would be a price reset, probably a lot higher. But we're not there yet, and there's no knowing exactly when that will happen. But I think it will, because we're looking at silver that's well below the cost of production, and we're looking at investment demand through the roof. So I think it's only a matter of time.
Yeah, that's the cost being below production. That's a real issue, and it's causing some major problems that I personally believe are what's showing up in the market right now, as far as people not being able to supply silver to the mints, to the refiners. I mean, if you're not producing, if you're not digging it out of the ground, you can't do any. You've got nothing. With the cost restraints that have been imposed by the paper market, I mean, there's only one outcome to that, and that is supply shortages. Period. I mean, and people can say whatever they want, and and I know that there's a lot of skeptics out there that say that this is that there's not a shortage, that it's a supply shortage. I think that it's just a shortage in general. I mean, there's been some very good information to come out of London over the past few months. I do a show called Shadow of Truth with Dave Kranzler, and he has some contacts that have told him that there's not going to be any silver. There's not going to be any of the Dore bars.
Right.
They're going away, and that's supposed to be happening right now, or no later than by the end of October. And I think that the restraints that we're seeing right now are only going to get worse. And I would tend to agree that if there is some sort of price drop that creates another huge surge, like we saw back in July, that there won't be anything available, and we will be experiencing those 2008 2009 premiums once again, where they're anywhere from 75 to 100% premiums, regardless of what it's selling for. You know,
Yeah. I think the mining situation is really interesting because the all-in cost of silver production is probably in the 18 to maybe even $19 per ounce range. It was in the low 20s last year, and it fell because of lower energy prices. It's a very energy intensive business. But
yep.
if you look at the idea that most miners of silver are losing money, if you factor in their capital costs, basically what happens is they start high grading and they go to the richest veins in their mines and the ones that they can actually produce profitably. And that actually makes future production even more expensive because
Right.
now they have no high grade or less high grade silver to mine, and they're only left with the lower grades. And so, with the cycle in mining being such a long cycle and the capital necessary to bring a mine into production, of course, finding it, bring it in, testing it, bring it into production, and then producing, it's a very long cycle. And so, whenever you have artificially low prices, shortages are going to start cropping up, and we're starting to see, demand pick up for investment silver. It's already been at high levels, but it's picking up even more. And supply is starting to collapse. In the last 4 months, we've seen reports of lots of mines that are cutting production by 10, 15%. And at some point, when the price sort of discovery mechanism comes back into reality and readjusts, you're not going to see more supply come out very quickly. I mean, if I was
Right.
a silver miner and I'm practically going out of business right now, or many of them have already gone out of business, do you think that if silver prices went to 25 or 30 or even $40 an ounce, that I'm going to double my investment in my mine? I'm practically out of business, or I'm just going to be very cautious. If you're a miner, unless you're an ideologue or something, you're going to be very, very cautious. You got burned last time. All your financiers got burned and are very risk averse. And that means that there's not going to be new production, and at the same time, demand is going to be demand would be very high, but it's basically going to chase prices up. And the supply, just you can't just flip a switch and see supply come back. So
Right.
that's the situation. That's why it could be kind of a snap or a boomerang kind of effect. It's just like holding a beach ball underwater. When it finally it's finally released. It flies. It overcompensates to the upside. So I think that's what's going to happen at some point in silver.
I would agree wholeheartedly with that, because it takes about 10 years for a mine to come online, and then once a mine has been shut down, that it's not like you said, you don't just flip a switch. I mean, there's a huge amount of effort and resources that goes into restarting that mine and to get everything back up and running. And I would agree again that these guys that have shut down or have cut production way back, 10, 15% or more, they're not going to just, their investors are going to look at them and kind of sideways and go, well, maybe not. You
And
guys smoked me last time. Why am I going to get
right.
back in bed with you?
Right, and then of course a lot of silver is produced as a byproduct of other
Yes.
metals, and copper prices are way down,
Yep.
zinc prices are down. So, that just the byproduct silver is under pressure as well. So, I mean, it's really an interesting scenario developing, and for the average investor. Or really anyone who wants to invest in silver, you don't invest in any kind of paper instrument. You want to get physical silver that you can either hold in your hand or store in outside of the banking system. And I think that's where people are moving. I mean, you look at ETF demand; that's actually not grown at all, and if anything, it's fallen, particularly in gold in the last a few years. So that's a paper proxy. It hopefully is backed mostly by the actual bars. But, again, when you're buying gold or silver as insurance, why would you introduce counterparty risk into something that's supposed to be your insurance? And
Exactly.
even ETFs that are backed by metal, and that but you still have a couple parties at least in between you and your metal. You have the ETF, you have custodians, you have sub custodians, you have sub custodians, and all of this metal is inside of this bullion banking system and vaulting system, where there may be in many cases multiple claims on the same bars of silver because of leasing and repurchasing and swaps and all that. So people need to get their gold and silver outside of the major depositories, put them in segregated accounts, store it privately, or
Right.
have it somewhere else. And I think that message is getting through to people a little bit, and that's one of the reasons we're seeing the demand pick up.
Yeah, I mean the only paper silver or gold that I would even consider would be the Sprott account. Now, I wouldn't even look at anything else, to be perfectly honest. I mean, if it would either be the Sprott physical gold or the Sprott physical silver account. Outside of that, they're all fraud. Their prospectus proclaims that they're fraud. The GLD and the SLV, both of those say we don't have any silver, we don't have any gold, we don't have to. And if we do, they've got it, but they don't have to give it to you. And they make it so that you have to jump through all of these hoops in order to get to your metal, and you have to be at a certain level just to even make the request to get the metal.
Right.
So
Right.
I mean, that's not for. I wouldn't suggest that to anybody at all. I mean, I would strongly suggest reading James Turk's um, detailed analysis of the GLD prospectus on that, because it's a scam and a sham. So, but Stefan, if you would, I mean, you got the Money Metals Exchange, which has recently been voted the best metals dealer by Bullion.directory. And if you would, just kind of introduce yourself and introduce the company to our
Sure.
audience.
Well, thanks. Yeah, we're thrilled to be to receive that honor. There's several hundred dealers in the United States, and Bullion.directory did a survey of industry insiders as well as customers. Something like 25,000 people participated, and we ended up on top, and we're named Dealer of the Year in the U.S. And I think the reason that we won that award is because we are very focused on content, education, but also first-time customers, and making the process very seamless and unthreatening and transparent. We also really, we've been in business since 2010. We were formed, I was in the publishing world and also public policy before that, but I formed the company really in direct reaction to what I perceived, and I think, is really a disservice that's being done to many precious metals investors out there, and that is the people that are pushing people into rare coins or supposedly rare coins. And we just don't think that's a good place for the average person to be putting their money. There's way too much of liquidity. There's way too much of a bid-ask spread, and there's often a lot of high-pressure tactics that are used to hoodwink people or pressure people into buying so-called rare coins that are not necessarily even rare. They're just being presented that way. They have beautiful plastic cases and holograms, and there's a collector market out there. It's a legitimate market. There's lots of good value there, but most people should not be in that market because they don't. Unless you're an expert, you shouldn't be putting your money into that. There's just too many rip-offs, and you don't know what your gold and silver is worth. And so we formed the company from the beginning saying we're not going to be engaging in any of those, not just sales practices, but we're not going to be selling those products. We think people should buy bullion, coins, rounds, and bars that are priced near the spot price. You know how much it's worth. There's a very small bid-ask spread. You're not going to lose 30% of your money if you sell back the same day. You know the bid-ask spread is generally 5% or less. And you're buying something that is going to move with the price of silver, not some subjective, almost like artwork kind of thing. So we've been really emphasizing not just that, but also educating people about the pitfalls of this and that kind of product, but also commentary on the markets. And because of our sort of publishing aspect, I think we're really at the top of the pile when it comes to educating customers and getting them off on the right foot. And so I think that was to our benefit in winning this award. And it's really, frankly, the best way to get new customers. We cast the net very broadly and give people good information so that if they just have an inkling that something's not right about the financial system, or what is this, I'm interested in gold and silver, but I'm nervous. There's something about some of those dealers that makes me kind of feel a little creepy. And we try to demystify it and build that relationship of trust with them, and then convert them into first-time customers and first-time investors in precious metals. And that's the part of the market that really excites me. I mean, I'm, of course, interested in servicing the people that already own precious metals and know why they want to own them and all that. But 98%, 99% of the American people are not in that category, and that's really where the opportunity is, and that's one of the main reasons we focus on that. So we have customers anywhere from $10 to $6 million, and it really runs the full gamut.
Yeah, and speaking of that spread, I wanted to ask you about and I'm not asking for details. Just, are you seeing a lot more large investors coming in? Are you getting a lot more bigger orders at this point, or how is that working out as far as what Money Metals is experiencing?
I would say it's actually been more skewed towards the smaller order in the last few months. We talked about first timers, and most of them are small. But we also had some multi-million-dollar orders in recent months. We had our biggest order was $6 million in early July. So it runs the full gamut. But I would say on the whole, we have a lot more smaller and first-time orders. 6 months ago, we seemed to have a few more. The average was higher. There wasn't as much interest, in general, by the new customer. It was mainly the more committed and repeat customers that we were seeing, and those tend to be larger customers because they always start small. And in fact, the guy who ordered several million, and this is pretty much the case with any large customer, they generally start at very small. And I think it was a first-time purchase a couple years ago. So we're not really seeing a lot of heavy hitters come in more than usual. If anything, it's the small guy.
Okay. And premiums we touched on premiums just a minute ago. Are they stabilizing? Are they increasing? Are they receding? And where are they at right now?
Well, they're kind of stabilizing now. 2 or 3 weeks ago, things were getting a little worse as far as premiums and delays. At this point, it's pretty much stable. Although
they're higher.
They're higher, but they're stable. Now we always think people should focus on how they can get the most silver or gold for their money. So we don't really want to sell people junk silver right now. I mean, we sell it because some people want it, but junk silver is, $5 over spot.
Now I need to interrupt you, because when you say junk silver, I presume you're referring to the 90% silver coin.
Right.
Okay.
Right. And it's not minted anymore, of course, since it's pre-1965 dimes, quarters, and half dollars. So, and it's the kind of thing that, the people that own that are in this, holders of that have strong hands. They know why they want to own silver, so they're not selling. And that's the only place supply comes from, is from people who own it, selling it. Newly minted stuff, obviously, you can keep, minting 10-ounce bars and 1-ounce rounds and even silver eagles. Although, the U.S. Mint is kind of dysfunctional as far as that goes, we discussed earlier. But I definitely think people should favor the lowest premium stuff pretty much all the time, which is why we always, encourage people to look at silver rounds, which are, often a couple bucks less than, silver eagles, 10-ounce bars, 100-ounce bars. And right now, the best deal, and I know this doesn't appeal to most people because it's a large amount of silver, but by far the best deal is buying 1,000-ounce bars at $29 over spot, which we're able to do if you store it at Money Metals Depository. And then you can later switch it into when premiums come down on silver eagles and you really want those. Well, you could switch your 100-ounce bars. You could trade out, and do an exchange transaction. So, just because silver prices are low doesn't mean that people can get silver cheaply, and that's kind of been the frustration I think a lot of customers have had.
Yep.
It hasn't reduced demand, though. I got to tell you, it's been through the roof, even despite the higher premiums, and that's a result of wholesalers and retailers like us having to pay more to get the inventory that people want. And our gross profit margin, which is very, very small, is not necessarily any higher in this environment, even though premiums are quite a bit higher.
Yeah.
And so people should look at the low premium things and the things that have no delivery delays if possible, such as silver Britannias, which are minted in England, as well as the Perth Mint funnel web spider. And the Perth Mint is just about to release a 1-ounce silver coin called the Kangaroo that is going to compete with the silver eagle and the silver maple, and hopefully be a little less even than the silver maple is. So that's coming out in 2 weeks, and we expect to be making an announcement about that.
Oh, that sounds awesome. I mean, I love the kookaburras. I really like the Perth Mint products across the board. I mean, they're super high quality,
Yeah.
And they hold their value. Their premiums always go up. I mean, because they do low mintages on just about everything, and it's a super product in my opinion when they're available.
And that's the goal with the Kangaroo program. They're not doing the limited mintage on the Kangaroo like they do on all these other silver coins, where they only mint 1 million of them, or whatever. It's usually 1 million.
Yeah.
The Kangaroo intends to compete with the silver eagle and the silver maple. In fact, they feel, and I'm hoping that they're able to do it, that they're not going to be plagued by the supply problems that result from the government-run operations, in Canada and in Washington D.C. or West Point. So they feel that they're not going to run into these shortages and allocations and rationing. So we'll see if they're able to deliver on that promise. Of course, with all of these other things so tight, when they come out with the silver Kangaroo in 2 weeks, it'll be interesting to see if they can keep up, because I think the demand is going to be even higher than they would normally experience, just because their product will be ready and live and ready to ship. So it should be interesting. It's certainly a good time for them to be launching a 1-ounce silver coin in the U.S. market.
I would agree wholeheartedly. And one last question, Stefan, and then I'll let you get back to your day. Do fundamentals still play a role with the futures market being in such a mess? And the ratio of paper to physical is well north of 120 to 1, while the acquisition cost, that is the gold and silver ratio, is also completely out of balance, being well north of 65 to 1. So what role do fundamentals even play at this point?
Well, there's definitely some distortions in price discovery, but I mean, at the end of the day, the collision between the paper market and the physical market has to happen at some point, because there will be shortages. If the prices are arbitrarily low, production will collapse. The inventories of these COMEX warehouses and other depositories around the world will get drained, and then there'll be some sort of reconciliation. So I mean, I know it's depressing to people who are bullish, like myself.
like
to,
myself.
to look at the last 4 years. But silver is many multiples of where it was, and so is gold. It's not something that people should be buying as a short-term investment, and they shouldn't have a trader mentality. And if you agree that we do that gold and silver is money and is being remonetized across the world, particularly in Asia, which has been, by the way, a huge amount of inventory has been flowing out of Western vaults to where it's more appreciated in Asia, and that's been another phenomenon in the last couple of years where gold and silver has been leaving, particularly gold has been leaving London and the COMEX vaults to go to Asia, where they're building massive new vaults in Hong Kong and so forth. So, I mean, at the end of the day, there's going to be a collision. I think, right now, you should look at it as an opportunity, and and also dollar cost average. Don't go all in. It could go lower, and I think for somebody who's in an accumulation mode and looking at this as a long-term asset and a form of insurance and a better form of money, just buy it over time and don't worry about it, and look at these price dips as opportunities.
That's exactly how I look at them. It's like I wake up and go, I hope it's lower. So it means I can get more,
Right.
and it means that and also the way that I look at it, Stefan, is the lower that the price goes, and the more first time buyers come into the market, the closer we get to creating that collision.
Right.
And so, I mean, I would like nothing better than to see silver at $10 and gold at 1,000 or even less, because it would completely annihilate the entire system. And
Absolutely.
I mean, it would just blow it up. It would be over. The pricing mechanism would be broken, and because there would be such a surge in demand, in my opinion. I mean, would you agree with that, or am I off base there?
No, I absolutely agree, and that's kind of what we've been seeing. It's been completely cleaned, not completely, but nearly cleaned out at the retail level. There's backlogs developing, and it's starting to cause a drain of the large bars off of these exchanges. And it's only a matter of time. The lower prices go, the more people want to buy silver at the retail level, and I think and the more people that own silver, the more people, it's put it this way: in the '80s, when there was a huge spike in silver and gold, but also especially silver, the Hunt brothers were trying to corner the market, and it was all kind of about just a few investors, primarily led by the Hunts. And they were playing on the futures exchanges and trying to take delivery there. Well, nowadays, the silver market is being cornered by the whole globe. It's an industrial metal, it's an electronic metal, it's the best conductor of light, one of the best conductors of heat, or reflector of light, I should say. And it's the best natural biocide. It's being used in all these high-tech applications. So it's got a growing industrial demand at the same time as on the margins. It's really been remonetized increasingly in the last few years and becoming a significant investment asset. So we definitely have a situation developing in silver, and I think that people should just relax and take a deep breath and just slowly accumulate.
I would agree with that wholeheartedly. And with that, we've been speaking with Stefan Gleason, who is the president of Money Metals Exchange. And you can find him and his work, along with all the products that they offer, at moneymetals.com. And Stefan, is there anything I'm overlooking there?
No, you did a great job. I think that it's just a matter of a few more weird things happening in the markets before we see some really significant shortages develop in silver. We're right on the edge of that in terms of the retail market, but it hasn't fully manifested, obviously, in the large 1,000-ounce bar market. So that's really what you want to watch. If you see premiums rise at the 1,000-ounce bar level, or you see delivery delays at the 1,000-ounce bar level, then something big is probably going to happen soon.
Well, we'll keep our eyes and ears open for that one. So, but I certainly appreciate all your time, and I hope that we're able to do this again in the not too distant future. So I think that you'd be a great contact to keep our audience informed as to what's going on. And I just appreciate all your time today.
My pleasure. Thanks again. Love to do it again.
All righty. We'll talk with you soon.
Okay, great.